I'm Will Carr, and I'm here to fire you up. What's up, everyone? I'm Will Carr here on the Will Carr Speaks podcast. I've got a really exciting guest today, Adam Blumberg, the co-founder of Protocol Wealth, certified financial planner, who has very interestingly been teaching cryptocurrency and blockchain to over 2,000 financial planners the last 5-6 years. So we're going to get into the financial planning side of blockchain. We're going to talk about crypto. These are some of my favorite things. Yeah. I'm excited to have you here on the show today, Adam. This is going to be a lot of fun. So really, just to get going, I'd love to hear, tell me about your background in financial planning and how that led you into cryptocurrency.
I will absolutely do that, Will. But first and foremost, I have to get the legalities out of the way.
Yeah,
all the disclaimers. Since we're a registered investment advisor, I'm a financial advisor. So everything I say here is not financial advice. I'm not your financial advisor. All the things we talk about here today is not an endorsement of any particular crypto assets, any particular equities, or anything like that. They are all volatile. Seek your own counsel and your own financial advisor.
Yeah. And so before you get into the story, I'll just say, Adam's going to say that, but you should probably listen to his advice and do it anyway. And I'll say, I'm really not a financial advisor. So if you're going to listen to my advice, definitely do that at your own risk, even though you should probably do what I say too. But anyway, getting into that, let's hear your story. How you got into this.
I can definitely teach some lessons, hopefully.
There you go.
Where I got into this, probably actually like my third career, I got into the financial services world back in 2009, which of course is an interesting time, right? Right after the financial crisis, we were still kind of in the Great Recession. So early 2009, I hopped into the financial world because I had sold an IT business and wasn't quite sure where I was going to go. And I waited out a little bit of that downturn. Got into the financial services business, quickly started my own registered investment advisor in Texas with a business partner there. And just so everyone knows, a registered investment advisor is basically, we're registered with the SEC. It basically means I can give any sort of investment financial advice for a fee. I can't sell products. I don't sell insurance. I don't sell annuities. I don't sell mutual funds and get a commission for that.
Yeah.
All I can do is offer advice for a fee. So that's essentially what a registered investment advisor is. It makes me a fiduciary for my clients, which basically means I have to put their interests first. So I had one in Texas, very traditional, very conservative. Because it's Texas, all of our clients were actually construction companies for the most part.
Okay.
And I went down that crypto rabbit hole in like 17 and 18. And my business,
a good time.
It was a good time, and then it was a rough time, right? It was like the kind of the first wave of hype that I remember.
Yeah.
And look, I was that financial advisor before that was like, this is all crap. Like I don't know what those Winklevoss guys are doing with all that Facebook money that they've invested in Bitcoin. This is kind of silly. They want to start an ETF or whatever. It doesn't make sense to me. And then my business partner kept saying, you need to buy some, just take a look. So I went on Coinbase. This is back when there were only 3 on Coinbase. It was Bitcoin, ETH, and Litecoin.
Wow.
So I bought
Bitcoin Cash wasn't even on there yet.
Nothing else was on there. I bought some ETH because it was right there in the middle price wise. I had no idea what it was, and it went up. And then I said, well, that was fun and that was easy.
Do you remember what the price was that you bought at initially?
It was about 180.
Okay.
It was about 180. It immediately went to like over 200, over 300. So I was like, okay, I'm going to play around with this. I bought some Litecoin, didn't know what it was. I think Litecoin was at about 70 at the time. It almost immediately was up at like 110 or 120. And, they were just killing it. And my initial thought was, this is so easy. I'm going to be retired in like a year.
Yeah.
Why is everyone not doing this? I don't know what I'm doing, but I don't know why everyone's not doing this. And so eventually my business partner said, there are thousands of these things. And I was like, you've got to be kidding, man. Why? And he goes, I don't know, but there are thousands of them. So I went on the different exchanges and I started trading them, and I'm a horrible trader. So lost money.
Most people are.
Most people are horrible traders. That's why, just like most people are horrible gamblers, right?
Right.
It's not a whole lot different. You got to be really good at it and have a system. I did not have a system. I didn't know what I was doing. I didn't know what these tokens were. And after I kind of lost, just the initial capital I had started with, I said, I got to figure out what this is.
Yeah.
So I went down the rabbit hole, did my research on blockchain technology, and I was super excited because this reminded me so much of the early internet days. And I was in college, so that dates me, right? I'm 50 years old now. So I was in college, like the super early days of the internet, when you could get Netscape Navigator. You still had to have dial-up, or you had to go to the university to actually use the internet. And so I said, I know where this trajectory is going, and I kind of want to be involved.
Yep.
So 2019, I started speaking at crypto conferences because they wanted someone with official looking letters like CFP after their name. I wasn't, kind of a crypto geek. I was coming from the traditional finance side. And late 2019 started a YouTube channel just to explain it, not to say buy or sell or you have to do this. Just here's how it works. Here's how finance works. Here's how crypto and decentralized finance works. 2020 sold the RIA we had in Texas because I said, this is not going to take off. Most people are not going to put this in their portfolios until their financial advisor understands it and kind of blesses it.
Yep.
So who's going to teach the financial advisors? Well, I didn't want the exchanges and the custodians and the hedge, the crypto hedge funds to be teaching advisors because they had a bias.
Right.
So I said, I'll go teach them because I don't have a bias and I know their business, right? I know how it works. I know how workflows work. Let me go teach them. So I started a company called Interaxis with a business partner at the time. And we, as you said, we taught thousands of financial advisors. I got to speak all over the country, different places in the world, basically helping understand how crypto, blockchain, decentralized finance, Bitcoin should be fitting into portfolios, how you should view it in terms of wealth management, where I thought it was going to go. And I started that in 2020. We started a designation and certification around it. And then came all the way to a couple of years ago. I moved here to Colorado and started working with a registered investment advisor called Bespoke Group.
Okay.
Which is out here in Evergreen, Colorado.
Yep.
And that's where I met our mutual friend Clayton, who late last year said, you know what, we have all these clients that have crypto wealth. We don't have anyone to manage it for them. We don't have anyone to manage that money because that takes an investment advisor, someone who's licensed, and that's what they want. And I said, well, I still have my licenses. Let's go see if we can get an RIA stood up with the SEC. We acquired a few more partners along the way as we were building that, and lo and behold, the SEC granted us our license April of this year.
That's awesome.
And so since then, we've been going trying to build this, pushing the envelope. We manage client assets. We manage for crypto founders, for crypto investors, for protocols, treasuries, for publicly traded companies that want to have crypto on their balance sheet. We can manage all that. Again, we're kind of pushing the envelope as much as we can, staying within regulation and compliance also, because I certainly don't want to run afoul of the SEC.
Right. And
I don't want to do anything that's later going to be looked upon unfavorably.
Totally. Well, I think that's where this is headed, is blockchain coming into traditional finance. That's where the sweet spot for all this is.
Right.
And now tell me if I'm right. It's a very small group of people that do what you do.
Very small in that I probably know them all. And I can probably count them on one hand, maybe two.
Yeah. That's what I was thinking.
Exactly. There are not very many that have wanted to delve into this. Now, there are financial advisors that will now allocate, a few % of their client assets to Bitcoin or to the ETFs or something.
Right.
But the ones that will manage native crypto and will manage it in crypto custodians and such, it is very few and far between. And again, I'm pretty sure I know them all.
Yeah. Before we get into what you can do with managing that crypto within the custodians, for people that don't know, because I'm sure there's several, probably most people have no idea what an IRA is. So will you explain that real quick?
You're talking about an RIA, registered investment advisor, or an IRA, individual retirement account? Because we in the financial world like to make things confusing and just use the same letters over and over and over again.
Now I'm confused.
I know.
Which one is it that you're doing?
My firm is a registered investment advisor.
RIA.
We're an RIA. We're
RIA,
a registered investment advisor. That means we're registered with the SEC, meaning I can give advice for a fee.
Yeah.
Right. That's really what it is. I can give investment financial advice for a fee. That can come in the way of managing someone's investments and saying, I'm going to charge you 1% of your investments. It could be, I'm going to charge you, $10,000 and create a financial plan for you.
Yeah.
And just give that advice.
So it doesn't mean you have your own funds. It doesn't mean you have your own investment.
We don't have our own products. We don't have products we sell. We don't have our own funds. What we can do is if you come in with your money, we're going to decide, and I'll give you the whole process, right? That might help to really understand it. So Will comes to me. He says, I have, $1 million. Most of it is in crypto. Some of it is not in crypto. And we start asking questions. We sign you to an agreement first because I'm not doing a whole lot of work for free here, right? I don't have that much time. So we sign you to an agreement. We work with you. We understand your needs, your goals, how much money you spend, how much money comes in, where this money came from, kind of understand your family, your risk profile. Obviously, if you're in crypto, you have a pretty
high risk profile.
Pretty high risk profile. So our risk profile has to move a little bit compared to most people, right?
Yeah.
Because ours is already starting off on the risky spectrum, on the risky end of the spectrum. So our spectrum has moved a little bit. But we talk about that. And then we create something called an investment policy statement that says, okay, for Will and his family, here's where you're willing to go with this. Here's, you say, look, I want X amount of my money in growth, whether that's tokens or equities or whatever. I want Y amount in something that is earning income for me all the time. I want a certain amount in cash at times. Here's where I'm willing to go and to get that income or to get that growth. Here's how much risk I'm willing to take. And sometimes, Will, that's where you tell me these are the things I don't want to do. In the past, you have people who say, I don't want to own tobacco stocks, or I don't want to own liquor stocks, or something like that. And we say, okay, that's within the investment policy statement. And then within those guardrails that we set, we get to go manage your money within there. And so we're looking at those parameters. And if any point, you say, look, I want 80% in crypto and 20% in traditional, and of that 20%, half of it needs to be in cash. At any point, if those numbers move a lot, then we go rebalance everything. And we meet with you every quarter or so and go, all right, where are we? How well have we performed? Are we sticking within this policy statement? And then if you come to me and say, hey, I want to take some of my money and invest in my buddy's, real estate business, we go, all right, does that fit within your investment policy statement? If it doesn't, then we need to rework that, or we need to have a conversation about what the risk is, what the liquidity is, where your cash flow is coming from. Does that fit? And if it doesn't fit within the policy statement, then we just create a new one and say, okay, you're comfortable with this, but we've talked to you about what that means, about what the risks are and what the liquidity is and such. So that's kind of what our role is there.
Okay.
If that helps.
Yeah, no, that definitely helps a lot. I think that explains really what your guys' role is in helping people manage it and how to even just get started, because I think a lot of people would be confused even on, there's not a lot of people right now are just confused on how to start investing in crypto or why or what blockchain. You talked about how there were 1,000. Now I think there's like 1 million or more. So there's so many different blockchains, and I do think we're going to be coming into a time soon where a lot of those are going to go away. We're going to end up with the chains that really have some type of store value or utility, some type of actual use case.
Right.
Let's get into, speaking of use case and protocol wealth, how to build wealth through these blockchain protocols. This obviously your guys' forte. And so I'm excited to hear. Talk to me about, as we discussed, I'm someone, I come to you with $500,000, $1 million of crypto, something like that. How do we then take those assets and start turning them into passive income yield? How do you build wealth with those assets?
Okay, so very good question, right? A lot of our clients do come to us with a significant amount of crypto, and we actually have to de-risk them a little bit, which says, look, if 90% of your wealth is in crypto assets, and it could be Bitcoin or ETH or XRP or whatever it might be, we know that those are volatile. They go up, the prices go up and down a lot, but most people don't like their net worth going up and down quite a bit. Everyone likes it going up. No one likes it going down. So we go, all right.
Yeah, you just get used to those swings. That's what I'll say.
You sometimes get used to them, but look, man, like you get a little older, you start to have family, you start to have things that you're responsible for, you got to pay bills, and you go, look, I don't like having to pay my bills when everything's down and I got to sell some of my stuff. So that's where when you say it's about building wealth, but really what it's about, Will, is making sure that the assets that you own and the income that you have matches what your risk structure is like and what your family is like and what your needs are. And that's a lot of what we do. We're not the folks that say we can take your $1 million and turn it into 10 million.
Yeah.
We're the ones who say we're going to get you steady growth. We're going to get you the growth that you want within your risk parameters.
Right.
And we're going to get it for you efficiently, hopefully. And so that's where we can look across the spectrum of the opportunities we have, whether those are in owning a token that represents a protocol like Bitcoin does or ETH does or Sol does or XRP does, or it could be we're going to take your ETH, put it into stable coins and manage for yield. We're going to try to get you 10% return, but maybe it's in stable coins where you don't have that volatility. It's just a consistent 10% return. And if everything else goes down, you still have that coming in. So it's less about turning your $1 million into 10 or $1 million into 100. We're not here to do the 100x. We're not speculating. We're not buying meme coins or anything. We're here to actually kind of tamp down some of that risk actually and make sure that the way that you're looking at your wealth and the way that you're growing your wealth is in line with who you are and is in line with what you need. Because what you don't want is to be that guy who, was up big at the casino. Yeah. And if you've ever left Vegas, the stories on the plane on the way home are always, well, I was up big at the blackjack table and then I gave it all back. Yeah. But it was okay because I got free drinks or something. Right. And they try to justify it to themselves.
They gave me my hotel room.
Exactly. Yeah. So that's what we don't want to happen. It's like, we want to help you walk away from the table. And you can play with some of the house money, but let's take that house money and let's try to build an income off of it. And let's see, hey, can we use the income or the yield we can generate from what you've built to help fund your lifestyle? And it can be little things like, if you have $1 million, can we generate enough income to pay for, your kid's private school or pay for your car or something to where that doesn't have to come out of other income you make from work? Yeah. Right. Like let's see how and the interesting part, Will, is for so long, even in the traditional financial world, right, going back to, 15, 20 years, there were very few places that you could actually earn decent yield, decent income, because interest rates were so low. They were arbitrarily held low by the government for so long. And so there was no place to get income. And so everyone was into growth. Well, at the same time, growth, all these growth stocks, all these companies' stocks went up. That's when you had, Google and Facebook and now NVIDIA and the Netflix came around and everything, and all their stocks went up, but there was no place to earn an income, right? So you just had to hope everything continued to go up. Yeah. Well, now in the last few years, as interest rates have gone up, and now you have this crypto DeFi thing going on, and we have a place to earn yield. You have more people talking about the ability to earn yield or earn income on their assets than you do talking about trying to just have the number go up. Yeah. Which is actually kind of a fascinating turn that honestly most financial advisors in the country haven't seen before, right, because again, it's new, right? For 15 or 20 years, we had no yield anywhere except if you
maybe certain stocks that pay dividends, like
right. But dividend paying stocks don't pay a lot of
They're not
the
high.
Percent is so low because they didn't have to be high. Right? They didn't have to compete with bonds because bonds interests were so low. Treasury interest was so low for so long. The only place you could ever get yield, and this is again where blockchain fits in nicely. The only time you could ever get yield is if you invested in something where you had to lock up your money for 5 or 6 years. Yeah. And they would go loan it out, or you'd be investing in real estate that was kicking off an income, but your money was locked up for 5 or 6 years at least. And, being a financial advisor, that's where we have to have conversation with clients and go, you want this 6 or 7% yield, because for a long time that was like extremely high. Yeah. You want 6 or 7% yield, but just know that you don't have access to your money for 5 or 6 years. Yeah. So you better be liquid everywhere else. Right. With blockchain technology, you get extreme liquidity with yield and income and the ability to move assets around, quickly and easily. And that's where this gets really exciting. And that's where, you know, a lot of financial advisors, it's kind of scary because, you know, you kind of go, okay, how am I getting this much income? And it's highly liquid.
Right.
Right.
Well, and I think that the answer to that, at least from my standpoint, and please correct me if I'm wrong, at any point in this this conversation, correct me if I'm wrong,
Sure.
Is that for the first time in history, we have the opportunity to be our own bank. And this is what banks do. Banks have access to that liquidity. They're able to go out and loan this money. They're able to go out and use your money to generate yield. Now, through these protocols, we can be the bank. Is that a factually accurate statement?
It is somewhat a factually accurate statement. Basically, you can take the bank out of the equation, right?
Mm-hmm.
And I'll go back and I apologize. Sometimes I get a little theoretical and philosophical because I've been talking about this for a long time.
I love it.
Right. So if you think about why we needed banks for centuries, we needed banks, right?
Yeah.
I mean, but going back to like the Medicis and such, you would deposit your gold there because you're not going to walk around with piles of gold.
Yep.
You deposit your gold and they give you a piece of paper called a banknote that represents the gold there. And it was a bearer instrument. And whoever brought that back to the Medici Bank would get the gold.
Mm-hmm.
Right. And then you know, and the Medicis could loan that out. They could do with it what they want. So they kind of started this idea of banking.
Yeah.
And there's a difference between banking and banks. So the idea of banking really is, how do I get money from someplace that's inefficient to someplace that's more efficient overall in the economy?
Yeah.
Money sitting in my pocket is inefficient. It is doing nothing.
Right.
When I can lend it to you so that you can, you know, run your podcast and earn money on it.
Yep.
Well, now you are, you know, maybe you're earning 20% a month on your podcast. You pay me 10%. Well, now we're being more efficient for the overall economy. I'm making something on the money that was sitting in my pocket. You're making something because you didn't have the money necessarily to invest.
Yep.
And it's good for everybody. The problem is that relationship doesn't scale very well.
Yeah.
It's very rare that I meet you at a time when you need money and I trust you enough and I have the money, right? So that's why we needed banks. We needed a place to park our money and they could hold it. And then they could go be the ones that find the Will cars and go, we're going to lend money to Will, even though Adam and Will have never met and don't live anywhere close to each other. We're going to take that on. We're going to get, you know, 9% interest from Will, and we're going to pay Adam 0.01%. Why? Because we have to have buildings and people and compliance and commercials and name stadiums after ourselves and all those other things that banks have had to do.
Yep.
But again, we had to outsource trust to them. We had to outsource that because we didn't have a choice in terms of scale.
There were no other options.
Right. The blockchain technology gives us the ability to scale because we can trust the code.
Yes.
We can trust the code to say, I can deposit some sort of programmable money in this piece of code and Will can come borrow it. And yeah, we don't have to know each other, but I trust the code that says if Will doesn't pay it back, it's going to take some of his money and I'm going to be made whole.
Yeah.
Right. So that's what we've done. We haven't changed banking. Banking is still there, which is moving money from an inefficient place to a more efficient place.
Yep.
It's the entity that's called the bank that was the one back in 2008, 2007, 2008, that took our money and did risky things with it.
Yeah.
And then went and asked the government for a bailout.
Yeah.
Right. And in 2008, of course, was when the Bitcoin white paper was written, right? In direct response to what was happening at the time, but also because all these technologies happened to come together. You had cryptography, you had, file sharing technologies. If anyone remembers, Napster, Kazaa, LimeWire, the ability to share files, that's where a lot of the technology comes from as well.
Interesting.
Yeah, because not saying I illegally downloaded any music ever in my life.
Well, I think you're past the 7-year period. Where
I think I'm past the statute of limitations now. But you could go on something like Kazaa or LimeWire and you download the software, and there was no centralized server. We were connected by virtue of the fact that we all had this software.
Yeah.
Well, that sounds suspiciously like Bitcoin or ETH or decentralized software, right? So you take that software, you take cryptography, you take the fact that people are really angry with the banks, and lo and behold, you get Bitcoin.
Yeah.
And then, enterprising people like Vitalik and Hoskins and stuff said, you know what, we can do better than even Bitcoin. We can take that technology and make it programmable. What happens if you put a bank on this technology? What happens if you put something like home title on this technology? And that's what they created with Ethereum. And now, things have blown up and gone in all sorts of other directions. And obviously the rest of the financial system is taking note and going, wow, that's a more efficient system. We kind of like that better. Mm-hmm. We don't like the idea of these centralized servers that get to hold all the data, because when you hold all the data, you get to be the gatekeeper.
Yep.
When you have it decentralized, then there's no gatekeeper, right? And I can interact with you without ever having to know you. And so that's what the important part is. It's not necessarily that banking is going away, but banks are being interrupted.
Yeah. So would you say, and you can answer this however you best see fit, but would you say banks as we know them will not exist in 5 years?
No, I don't think I would say that. You say banks as we know them, right?
Right.
And I don't know what as we know them is,
yeah,
right? Because
I intentionally said that vaguely. So
right, exactly. You can say banks as we know them, like, Chase Bank is on the corner and I can walk in and do what I need to do. And there's people there, right? That has been going away for a while,
right?
Because we do online banking. I mean, the bank that we have for our company is it has no physical existence.
Yeah.
Right? It doesn't have physical buildings or anything I can walk into. Everything is online. So everything goes through these iterative changes. And when you look back, you go, wow, like that was obvious. Of course that was coming.
Right.
But looking at it now, it looks like really big changes, but we're stepping through, right? I mean, banks like Novo and Mercury and such, they're completely online banks. Mm-hmm. So how much different is that from a decentralized protocol that's allowing me to store my money and then lending it out to someone else via code? It's not that far-fetched.
No.
But if you take it from the perspective of Chase or Bank of America or Wells Fargo, it looks like science fiction.
Yeah.
But if you take it from the perspective of a Novo or a Mercury, it's not that far, right? Further, and something that I know you and I both have kids, right? So like my daughter will likely, I don't know that she'll ever set foot in a bank
or have a checking account.
Right. Everything's going to be done on her phone.
Yep.
Through wallet technology, the technology that we have in the blockchain world. But to her, it's not going to be, well, I have my wallet and I have to have my seed phrase and all those things. It's just going to be natural.
Yeah.
Just like for us, online banking is natural.
Using
just like
the app.
Yes. Apple Pay, Google Pay, and being able to check on the bank app and move money around, while I'm waiting in line somewhere. I can do that now. I mean, I had a conversation with my mom yesterday, right? That she said, why did you pay this bill for me? Why did you do this? And I said, Mom, I can do it in 3 minutes.
Yeah.
Like, I don't need to go to the bank. I don't need to write a check. I don't need to make a phone call, nothing. I can do these things in 3 minutes while I'm waiting for a call to start.
Yeah.
That's why I do it, because it's easy and quick and it's native.
Yeah.
The same way from my kid, it's going to be native to just have your money on chain and not think too much about it, because that's just going to be the way it is.
Yeah.
Right. We're going to look back on it and we're going to be those people. And you and I talked about it the other night. They're like, remember when I had to walk into a bank and I had a checking account and I had pieces of paper that I actually wrote to people that said how much money I was going to give them? Mm-hmm. That's, my kids can be like, that's crazy. Who writes checks?
The good old days.
The good old days.
I'm going to miss my bank tellers. I love my bank tellers.
Man, when I got a checking account, I was in high school and I had a job and I had a checking account, which was so exciting. And I had to go to the grocery store, to the customer service window, and write a check for cash so that I could get cash in my pocket for the weekend.
There's no ATM.
There was no ATM. And so to fast forward to where we are today, that literally I don't need to take my wallet even anywhere. I just use my phone and tap it everywhere. Or you can use your watch and tap it. It's kind of it looks like science fiction when you look at it from the 80s, but it has iterated consistently till now. And again, blockchain technology is more iteration of the technology.
Totally.
That's it. It's just internet technology, the next step and the next step and the next step. And where we are now, it gets very frustrating because I'm like, I want this to happen faster.
Right.
I want it to go faster. And it doesn't. But when I look back on it in 10 years, I'm going to go, man, that happened fast.
How did it happen so fast?
Yeah. Remember when we used to have to fill out paperwork?
Yeah.
Like, that's not going to happen. You're just going to sign in. You're going to look at your phone and it's going to have all your information on chain, and bam, you're going to have, accounts, and you're going to have retirement accounts, and you're going to get a mortgage for your house and all those things by looking at your phone. And it's going to be done like that. And we're going to look back and go, in my day, it took us 30 days to get a mortgage approved.
Yeah. Now mortgages will be proved instantly.
Exactly.
And I think that's what's interesting. We talk about, we can tap with our phone, we can tap with our watch and pay. So from a functionality standpoint, we're really basically already there. But I think what blockchain, because you talked about like Nova Bank and another one, they might be online banks, but they're still functioning in more of that traditional finance way on the back end. I think what's different, what's about to change dramatically is that back end settlement, that back end plumbing, the way that the blockchain is going to alter the speed to which that the proof of funds and the transfer of those are done. Because I might Venmo you today and you see it in your Venmo app immediately.
Right.
But that doesn't mean the settlement actually happened. That's basically Venmo's crediting you that $100 that I sent you.
Right.
But they've still got to get that $100 out of my bank account.
Exactly.
And that takes days for that to happen.
Yeah.
So can you like just touch on that a little bit? How's that the back end, that plumbing, how's that going to?
Instant settlement is going to be game changing.
Yeah.
Right. Like when we start, and we're already seeing kind of experiments, Visa, MasterCard are already experimenting with instant settlement. Because you're right. I paid for a coffee this morning, but it's Saturday when we're recording this.
Yep.
That the coffee shop isn't probably going to get that money till Tuesday.
Yeah.
Right. But it kind of shows that they have it. It's this weird, time in between. So instant settlement is going to be a big deal because, again, I will only be able to send you money, and sending you money is either, I owe you money or I'm paying for something, whatever, if I already have it.
Yeah.
There's not going to be this idea of, I'm going to pay for something, but if I didn't have it, then, where's the disconnect there in the flow of funds? And it's going to be, an even bigger scale when you talk about things like paying for property or paying for oil or something, where you're talking about billions of dollars changing hands. And if it can get changed hands in an instant and not have to take
for essentially
days,
free.
Right. Exactly. For very low cost, but you can verify the numbers, or you can, as we call, wrap them in a smart contract to say, I'm going to sell you these goods, and I'm going to tell you when the goods leave my shipping dock over here in China, and you're going to put that money in a smart contract, and we're going to track the goods. And as soon as they hit the port in California, that money gets released to me, and you now have ownership of the goods. And we can track it and verify, and it settles instantly. There's not purchase orders going back and forth and accounts payable and accounts receivable. It can be paid instantly.
Yeah. Right.
So that's going to be a big deal. It's going to be good for some people. It's going to be bad for others. There are others that live on what's called float, which is basically, I'm going to pay you in 30 days. I get to hold on to the money and sell the goods for those 30 days. Mm-hmm. And by the time I pay you, I've already made money on that.
Totally.
Right. I mean, Walmart's business model is I'm going to pay you in 30 days. I'm going to move my inventory every 10.
More like 90.
Right. Yeah. I'm going to pay you whenever I want because I'm Walmart. Right. But I'm going to pay you in 90 days. I'm going to move inventory every 10 days. And therefore, I'm going to cycle that so many times and earn interest on that money that sits in the bank waiting to pay you. Mm-hmm. I mean, that's their business model, essentially. They don't have to mark everything up. That's why their prices can be so low.
Right. And so do you think that's going to change from a retail side for wholesalers? Like, is it just going to be because things are so much more efficient now? They're not going to be able to compete if they're trying to have terms? Or is that just an example?
I don't know.
Really?
I mean, that's just an example. Look, and I hesitate to go, here's who's going to go away, or here's who's going to get replaced. Right.
Yeah.
And I'll go back. I apologize. I always use the internet as an analogy because I literally lived through it my entire adult life. The internet has been growing. And when the internet kind of started, right, when you could email someone, when I was in college, I could email like 4 people because they were the only 4 people that had email. Yeah. And 2 of those people didn't know how to get it, right? So I could email 2 people essentially. And then you go to, one dude in Seattle decided to sell books online. Yeah. Right. And it was crazy talk because I could go to Barnes and Noble and get a book. Why am I going to?
Why would I ever do that online?
Why would I put in my credit card and maybe it gets compromised and I'm expecting to get a book at my doorstep in a week and a half because that's what it was at the time. Yeah. Or I could, trade Pez dispensers on eBay or something. Like those were the big use cases for the internet. Yeah. And you couldn't look at that and go, here's how much is going to change in 25 years. Here's where we're going to get. We're going to get to this point where your bank doesn't physically exist, and I can call a car to come get me and take me to wherever I want to go and never have to take a dime out of my pocket. And I can rent a condo without ever having to meet the owner. Like all those things that happen, and that happened in the meantime because you had these iterative changes. And it all happened because, again, a guy decided to sell books on the internet. And then a company like Yahoo said, you know what, we're going to, all this information is there. We need a way to search it all. We need a way to go find it because not everyone's a computer programmer and can go find the information. We're going to build that. And Google said, we can do it even better. And then Google said, by the way, as long as we're looking, you know, as long as we know what everyone's searching for, we can make some money on that and sell ads and everything. And you end up with all these different parts of the economy, right? Like you never had online ads before. You never had Google ads. You never had, you know, Airbnb and Uber and all those parts of the economy before. So yes, something is going to go away and something else is going to grow in its place. There's going to be other people. So it's hard to go, here are the industries that are going to go away, or here are the industries that are going to get hurt. People are smart. They're going to figure out ways to utilize the technology to make everything more efficient, make everything better. And all I can say is that the best thing to do is kind of understand it a little bit and be prepared, or just kind of shut your eyes and go along. And in 20 years, you're just going to be, all your money's going to be on chain. And in your mind, not that much is going to be different, but then you're going to look back and go, man, things used to be really different. I used to write checks and I used to have a debit card and credit cards and all that. And now I just tap with my phone or my watch.
And you're going to say, man, if I had just invested in some of that blockchain 20 years ago, I
I
wouldn't have to be working today.
Exactly. Which I say now, I wish I had understood that. But then again, and this goes back to the idea of creating wealth, right? Because the people that I know that have become fantastically wealthy in the blockchain world, right? They have had so much conviction in what they invested in years ago. So it's not just like, well, if I had invested $10,000 in Bitcoin back in 2010, I'd be a billionaire. Like, no, you would have had to go through so many huge swings of up, 400% and down 80%, and up 600% and down 80%. And would you have had the conviction to hold it that long? Would you have had the conviction that the founders of Ethereum had to say, yes, this is rough. Yes, this DAO hack happened and all that, but we still think this is the way forward and we're going to hold all these assets. You probably wouldn't have had that conviction to do that. And so now
it's easy looking in hindsight.
In hindsight, you go, oh, that seems so obvious. Of course, Bitcoin was going to make it. But there are 10 million things that could have gone wrong to not have Bitcoin where it is today. Right. So that's very important to understand, is the opportunity to go from virtually nothing to billions of dollars isn't there anymore. So if anyone's looking for that and trying to get there, it almost doesn't exist. You're not going to have another Bitcoin. You just can't have that exact thing again. Just like you can't go back and restart the United States. You can't go, we're going to make the exact copy of the United States in a different place, because the exact factors that came about to build the most fantastically wealthy, powerful country in the history of the world won't ever exist again. You can't you can't copy paste that. Canada's tried, Australia's tried, all these countries tried, but they can't do it. Because they don't have the exact same set of circumstances. You don't have the exact same set of circumstances that can get you Bitcoin. So trying to put, $1,000 into some sort of token thinking it's going to be the next Bitcoin is just not. Is it like that? That's maybe the only financial advice I give is that
financial advice.
That won't happen again. But what you do see is people who are entrepreneurial and trying to build protocols and trying to go, we can take this little slice of the economy and make it better and more efficient. So I'm going to build a company around it. Just like Zuckerberg built Facebook and said, there's something missing here. There's a way that people should be keeping in touch and communicating, and I can build that. And then other people, it was kind of like MySpace kind of tried that, and others kind of tried that, and none of it worked. And you can't build another Facebook. People have tried to build the on-chain Facebook or the crypto Facebook. It won't happen. Because you don't have those same set of circumstances.
Exactly. And I think that's what's so exciting about this space. You talk about something like Facebook, and when the internet came out, who would have thought? First of all, who would have thought we'd have these phones,
Right.
like with these screens in the
Yeah.
palm of our hand.
Yeah.
And when we had that, like the internet came out, who would have thought we'd have this screen in our hand that I could snap a picture of us or
Right.
whatever and immediately post it on an app, and then other people could open that app and look at it.
Right.
That's what's going to happen with cryptocurrency. That's what's going to happen with blockchain. The things that can be built on it that entrepreneurs are going to ultimately build and create, we cannot even fathom them right now. We can't imagine them because we've never lived in that world. Just like you would have never imagined the Instagram app.
Right.
There's no way. You would have never imagined online banking app. You would have never imagined those things because we had never lived in a world where an idea would have come to you like that. That's why you have visionary entrepreneurs like Zuckerberg that build these things. And so I think that's really, really fascinating because we're at this place in blockchain right now where we talk about protocol wealth, generating yield. It seems to me that the only real opportunities on there right now are these lending type protocols where you can loan money from one person to another that's backed by a certain asset, and you can generate some yield from that, and I can pay an interest and use those funds, but it's guaranteed by certain assets that I have. That's protected through the code, as you said. But the next stage of this is something that you were talking about earlier, and we're not quite there yet, but we can see it on the horizon when we're talking about tokenized mortgages, tokenized titles for our real estate, tokenized traditional finance products. Everything of value is coming on chain. Real estate, the title for the car that you own.
Right.
Things as simple as no longer will Airbnb just be, I am paying you to rent a place for a while. There'll be some sort of like, okay, I'm paying, through some smart contract, you're paying for the rights to rent that place. And I'll own the rights to rent that place for a certain period of time that then I could ultimately go and resell, depending on the smart contract.
Right.
The smart contract might say, no, you can't go and resell it. If you're going to do that, it has to go back to the owner first, or the owner gets some type of cut.
Right.
Because maybe say I rent a place from you for a week, and then it gets announced that, the Olympics is going to be held in that city for that week or something. And now all of a sudden that week of rentals were 5 times what it was. Well, now maybe I can resell that, but the owner gets an additional 20% of my resell.
Right.
The possibilities are endless.
Someone's going to come up with that. But the interesting part is we've already started to see kind of where the technology has taken us into new worlds in terms of how to earn money and how to contribute to the financial system.
Yeah.
And an example of that is decentralized exchanges, right?
Yeah.
Decentralized exchanges came about. So in a typical exchange, meaning like a stock exchange or something, right? There's this centralized order book that says, here are all the people on one side that are trying to buy a stock and all the people on the other side that are trying to sell a stock. And everyone puts their order in. And when my price to buy matches your price to sell, the market matches us up and we have that transaction. I buy 100 shares, you sold 100 shares, but it goes through the market. What decentralized exchanges have created is they've said, look, what we really need to do is everyone puts their assets into a pool, and they can be 2 different assets. It can be ETH and USDC, which is, US dollar coin, which is worth $1. Put those into a pool.
Yeah.
And as I put ETH into the pool, I take out a certain number of USDC, or as I put USDC into the pool, I take out a certain amount of ETH. But everyone who contributed to that pool earns a tiny fee. Right. So you get to be part of the exchange now. You get to be offering up your liquidity to others that can buy and sell it, and you earn a fee for that. Well, that never existed before.
Yeah.
Right. Because the centralized exchanges took care of it. So what we started with in the crypto world on the lending side and then on the decentralized exchange side is what you have is pools of capital. And those pools of capital are going to be used for something, and whoever contributes to those pools is going to get compensated.
Yeah.
That's a little bit like what a lot of hedge funds are, right? I put my money into this pool. I trust that those hedge fund managers are going to go do with it what they said they're going to do. But that's where I talked earlier. Usually when you put money into a pool like that, you lock it up for a certain number of years to where you can't get your initial capital back out. You're just earning some sort of income, and hopefully it's a pretty decent income. Now what we have, but starting with lending, moving on to decentralized exchanges, going into things like tokenized funds, going into these so-called real world assets, tokenized private credit and such, is I can get pools of capital into a smart contract that are all programmable. And then I'm the one who's saying, here's how I'm going to deploy that capital.
Yeah.
And I don't necessarily have to go door to door and go, can you invest $100,000 in my fund? Can you invest $100,000? Can you invest $100,000? I can put it on chain and go, look, here's a smart contract. You can audit it. You can make sure that I can't steal your money. And here are the only things I can do with it. And people all over the world can just connect their wallets and bam, their money goes into that pool. And I go use it for what I said I was going to use it for. And if I don't, it's all transparent. And there's rules in the smart contract that said all those people can just take their money out.
Yep.
Right. So those are kind of the next steps. And that's why I say really smart people are going to look at this and go, oh, well, I know where there's inefficiencies.
Yeah.
I can use a pool of capital and use it for this purpose. We talked to someone the other day who's using it for certain private credit purposes. A big one is going to be what's called, it's factoring. Invoice factoring, right? You owe me money, and you need to pay me. You have 30 days to pay me, but I need that money right now in order to pay my people. If I'm a logistics company, pay my drivers, whatever. And there are factoring companies that will give me money, and then they'll collect from you, right? And they'll do it in 30 days. Well, that's a great use for these pools of capital for invoices, for factoring invoices. Another one that oddly enough, I'm most excited about, which is weird to say, but is insurance.
Yeah.
Insurance is nothing more than these monster pools of capital that are financing some sort of risk, but it's really the purview of the insurance companies to hold on to that money and invest it appropriately so that they can then pay out benefits at some point.
Yeah.
Right. And those insurance companies have just been creating money. They just keep growing and growing and growing those pools. And most people do not have the ability to participate in those. It's like super high net worth people. Yeah. It's businesses, it's pensions, but it's not most people.
The everyday person doesn't have that.
We're going to have the opportunity to invest in those insurance pools. So going back to like your Airbnb example, right? When I rent a place on Airbnb, there's some sort of insurance fee involved, right? Which means the owner of that condo had to go get insurance. Well, what if there's an insurance pool that's going to insure for the 3 days that I'm there? Yeah. Right. And chances are nothing's going to happen. So over 99% of the rentals, nothing's going to happen. And that money's just going to sit in there and grow and grow and grow. And if a benefit has to be paid out because I created a fire in the kitchen or something, then they'll pay the owner of the condo from that pool of money. But those are so few and far between that it's not really going to affect the pool, right? Well, why wouldn't that insurance opportunity be open to more people? Yeah. It makes sense.
And that's one of the most exciting things about it, man, because the insurance industry is such a great example. I'm glad you brought it up because there's so many types of insurance too. Right. And the ability for all these things to come on chain does two things the way I see it. One, it's going to open up these ways for people to make money that the average person's never had access to before. And that's through the fractionalized ownership of these type of pools, the fractionalized ownership of these type of tokenized assets, these real world assets. Right. 1 million people can own a tiny portion of a big thing versus one person or a couple people that are all really big have to own it all. So that is the first part, is that it will be able to be fractionalized, and it opens this up to everyone. And then the second part of this with the insurance is it's going to make it so much more efficient. Like right now, these insurance companies I need to think of a different word than the one that was coming to my mind. These insurance companies can take advantage of people. and they can make huge amounts of money, which if you've had the opportunity to own insurance and do that, it's been great for you.
Right.
But now what's going to happen is by these options being able to come on chain and people being able to create these smart contracts, the competition for insurance is going to be so dramatically higher that it's going to drive down the cost and make it so much more affordable for people.
Right.
Because if a certain insurance company today might want to make, I'm just going to make up numbers,
Right.
say they want to make 100% return on their money, there's going to be a pool of liquidity that's going
Right.
to come in and say, we'll insure this and make 10%.
Right.
And then that's going to dramatically lower the cost of the people that need insurance. And so I think about that for things, especially something like health insurance, which obviously huge talk right now in the world of, and especially here in the US, of health insurance, and everyone's premiums are doubling or tripling or whatever. Well, why is that? It's not just because costs are going up. It's largely due to the fact that insurance companies want to make, and they've had these ability to make a tremendous amount of money for long periods of time. But by this technology coming together, there's going to be able to be pools for health insurance that will be able to be dramatically more cost effective for your everyday person. Mm-hmm. And then not only, and this is where smart contracts just get so cool, because I'm diving down the rabbit hole a little bit here, because not only am I going to be someone who I want health insurance for myself, the costs are coming down. But what it can be through the smart contract is I'm an extraordinarily healthy person. So I might be buying health insurance because maybe something bad happens. But if I'm never needing to use that health insurance, if I'm never having to draw from the pool, I'll actually be able to make a return from it. So not only am I going to be able to have access to get that health insurance, it can actually be an investment. Right. And that's what insurance companies are going to be able to be, whether it be life insurance or whether it be health insurance, insurance on my car. Right. Think about that. The person that has to insure their car right now, we all generally pay the same amount, based on our driving record. But if to take that a step further, if I don't have an accident in my car and 10 years have gone by, the smart contract can be like, hey, you've been investing into this pool. Now your insurance is getting cheaper, or you're getting a dividend from the pool because you've been investing so much into it. Right. And it's going to radically change the way insurance works at its core.
Right. It's just going to change it. And so that's going back to your question from earlier of like, which, where our warehouse is going to go away or something. Like, it's just going to change what insurance is and how it's delivered and how we're able to get it. And the early days of blockchain, there were these talks of now we're going to get to do like crop insurance in small countries in Africa or India or in Southeast Asia or something, where these small farmers couldn't get it before because it wasn't efficient for large insurance companies to insure. And now it'll be much more efficient because you can pool some capital, you can use metrics, you can use electronics, you can use IoT devices to measure and actually pay out farmers if you need to. That was kind of the, what we liked about, and that's what we envisioned for the blockchain technology. But that's going to be pervasive into, like we talked about, life insurance and health insurance and auto insurance and all those things. And look, we've already seen some of those things happen. You just haven't thought about it. Like, many auto insurance companies, if you put a little device in your car or put an app on your phone that tracks your driving for a while, you can lower your insurance rates because now they can give you a premium based on your exact driving. Yeah. And they don't have to put you in with this big actuarial table of everybody else. The same is going to be true with like life insurance. Right now, you pretty much get approved for life insurance in different categories based on your health, but it's going to be very particular. You're going to be able to get it like that, in seconds. I think you're going to be approved for life insurance. You might even be able to get it like if I'm taking a trip, overseas tomorrow, I might be able to buy life insurance for the period of time where I'm away. Right. Like, and that's it. And it's going to cost me virtually nothing, but totally worth it for my family if something happens. Well, I won't say totally worth it. They won't have me anymore. And I hope they, get upset for it. I hope they value a little bit. But that, financially, that would, ideally be worth it. Yeah. So it's just going to change the market. And again, smart people are going to get in there and figure out how we're going to utilize this technology, this ability for these pools of the liquidity we have, the ability to manage these assets with liquidity and continue to turn a profit and make everything efficient. So it's not like insurance companies are going to go away or banks are going to go away or anything's going to go away. Everything's just going to change. Yeah. Right? Like the way we consume things, the way we invest, the way we live our lives. And that's why I'm glad this conversation went this way, because it's not just about put money in and how do I make money?
Yeah.
But it's also about how do I make my own insurance more efficient? How do I make my life more efficient?
Yeah.
And that's just what technology does. And we're sitting here talking about it like it's this, huge, big ordeal to change it. But I'll go back to my internet example. Like, let's look at how we consume TV and movies, right? I mean, you're a lot younger than I am, but I'm sure you remember a day where you used to have to change channels on the TV and watch whatever was on at the time. And if you didn't catch it when it was on, you didn't watch it.
Yeah.
Or if you were good enough to set your VCR and knew how to work the VCR, you could watch it later on
VHS tapes. Yeah.
Right. And then you had things like TiVo that would allow you to record live shows or record shows. You could store like 8 of them on your TiVo device. And then you have Netflix, right? Which started out as, we'll send you a DVD in the mail and then you can return it. We'll eliminate this whole Blockbuster having to go to a store thing. We'll just send it to you. But that gave us, Netflix streaming. Now I can watch the TV shows online. I can watch them on my TV whenever I want. And then that gave us Netflix actually produces shows. Yeah. Why? Because they have all this data as to what we like and what we want, and they can make the show, and they don't have to worry about, are they going to get advertisers or anything? Because they have subscribers, right? So it totally changed the way we consume media, the way we consume entertainment, but it happened in little steps to where now it just is. You don't think that much about it. But, I remember turning dials. I remember actually pushing buttons on my cable box and having to watch things when they were on. And like Thursday night TV was must-see TV when I was in college. And no one did anything Thursday night between 7 and 9, because that's when you watched Friends and Seinfeld and ER. And that was your only chance to watch them. And if you missed them, you had to wait for summer reruns.
Yeah.
Or your friends had to tell you what happened. That was it. And to where we are now, to go, like a season of Netflix comes out in one day and you can watch the whole thing, right? And it was produced by Netflix, which is crazy to think that an internet company is making shows and movies, and they're making good ones too.
Yeah, man, things are just going to keep evolving and changing so fast. And I mean, it's exciting when you're one of those people that love to see innovation. It's new things that are expanding our mind and showing us things that we could never even imagine before.
Right.
To bring that back into today and investing. So through Protocol Wealth, we've talked a lot about what will come and what is. What are the main strategies or strategy that you implement through Protocol Wealth today? If I come to you with money today, what's the main strategy implemented in order to generate that income or build that wealth?
For the most part, we're doing, again, we're not giving financial advice, but for the most part, we're doing for folks that already have that wealth. And if that wealth is already on chain, whether, some sort of crypto assets, is for the most part, how are we going to earn yield on what you have based on what you need, right? If you have a bunch of Bitcoin, are we going to be able to earn yield on your Bitcoin? That could be lending it out, or that could be using option strategies or something. There are ways to, kind of stake Bitcoin that aren't really staking Bitcoin, because Bitcoin can't natively be staked, right?
If it's through like wrapped Bitcoin on ETH.
You could do wrapped Bitcoin on ETH, and you can lend it out and you can earn some. We have option strategies where we work with actual derivatives desks that say you're going to write a covered call on Bitcoin, for a future price, and you're going to get the premium on that. So there are different ways that we can earn on Bitcoin. There are different ways that we can earn on ETH, and that could be you stake it, you provide it to a liquidity pool where like I said, you're going to earn a little bit as people are trading within that pool. If you go, look, I need to take down my volatility a little bit. We go, okay, let's take a few $100,000 of your ETH and let's convert it to stable coins. And now we can contribute to those pools again, and you can be earning 10, 12%. But the underlying asset that you have there isn't moving up and down. So that's where we're going a lot right now, is a lot of yield generation. How can we generate yield while still keeping you as safe and secure as we can?
Liquidity pools.
Through liquidity pools, through lending and liquidity pools. Sometimes there is some it's called looping, where you can, put your money in a liquidity pool, earn something, lend it out, and do it again. But again, do it in a very consolidated way where you're not taking a tremendous amount of risk like it sounds like you are. And by the way, we can buy insurance on all these smart contracts to make sure that we kind of absolve away the technology risk, right? Again, going back to that insurance discussion. So that's where we are now. The next step, I think, is going to be these tokenized real world assets, right? Private credit, real estate, oil and gas, those kinds of things that most people don't have access to invest in. I think that's going to be the next one, is we're going to be able to put RWAs into client portfolios so that they can be diversified saying, I own crypto assets, I own the dollar, I own Bitcoin, I own ETH, I have investment in my company, and now I can go invest in this private credit, and I'm earning 13% because this person over here is really good at finding folks that need to borrow money and can pay it back on time, right? And so I'm going to go invest in that, and it's totally diversified from everything I do. And I can go buy some real estate in some part of the country. I can have a little piece of it, like you said, a tokenized piece that's earning me 8% return or something. I have some friends who are doing this, and they invest in Starbucks, like the land where the Starbucks is, and that's it.
Cool.
And they're it's earning 6% or something, but Starbucks always pays their bills.
Right.
Always.
Yeah.
So
they're not going to default anytime
exactly.
soon.
So yeah, it's a lower yield, but it's pretty rock solid. But you can have a token that represents that, and now you have a rock solid 6% earning investment backed by Starbucks
that you can instantly sell if you want, because it's instantly liquid on the decentralized exchange.
Right. Because if all of a sudden you find something else you want to invest in that's earning 8%, you go, oh, I want to take my money out. But Will might come in and go, look, I need to tamp down my risk. I definitely want to own a piece of that Starbucks and earn that 6%. That sounds awesome to me. I want it. And there's an exchange for that. Right. And since it's all transparent, we're able to view what that investment is and be comfortable with it. Right. I don't have to go do a ton of due diligence because everything is there on chain and I can view it. So right now it's not we're not necessarily creating like diversified crypto portfolios. Like we don't sit there and choose which crypto assets we think are going to go up or down. Right. Because that, one, has proven to not be a great way to make money. And two, everything kind of goes up and down together. Right. Yeah. Bitcoin goes up 5%, everything else goes up 10. Bitcoin goes down 5, everything else goes down 10. Right. Yeah. Like everything kind of moves with Bitcoin. So what we're doing is saying, how can we generate you some yield, maybe take down some of your risks so you're not as risky? And we can do most of that on chain and decentralized exchanges through these liquidity pools or through lending. The next step that we're approaching is how are we going to get some of these real world assets on chain into these portfolios such that they're diversified, such that we can get, we can diversify away from some of their risks, still get them yield, but it's not all crypto yield. Right. It is actual yield because they own a piece of real estate or oil and gas investments or private credit. Yeah.
Yeah. And I mean, that's, so revolutionary. So you talk about most of the people that are coming to you right now, they have a significant amount of wealth. They have a significant amount of crypto. And I think, that's because we're at a point in blockchain where if you've been investing in crypto the last 5, 6, 7, 8 years, you are, unless you're buying stupid meme coins and just gambling in the Solana casino, you've accrued wealth. It's gone up in value, multiples.
Right.
So people are coming to you with a decent chunk of change at this point. How do you see it for maybe, like for the college athletes that I speak to and I talk to? How is it possible for them? Or is this something that you're starting to build now? And where is this headed? But maybe they have a couple $100s a month that they're trying to put in and rather go to their Fidelity or their parents' Charles Schwab broker who just wants to put it in some type of index fund. Right. They're wanting to build wealth through blockchain. And right now, those people are probably just going on Coinbase, buying something. Maybe they don't even know what they're buying, to be honest. what's the path forward for that, for someone who maybe wants to come in, do a couple $100, maybe $1,000 a month? Like how can that work through a protocol wealth type environment?
So what I would tell a lot of those people, especially if they're college athletes and they're interested in this, is one, go learn about it.
Yeah.
Right? Just like I'll go back to when I was graduating college, learning about the internet, not because I wanted to invest in internet companies, but to learn how to build a business or to learn how to build my career on the internet. And I'll go back and say, look, many more millionaires have been built creating companies that utilized Amazon or utilized Google or utilize YouTube than people buying those stocks and holding on to them for all this time.
Yeah.
Right. So just like buying crypto assets at this point, a little bit at a time might not make you a millionaire in 10 years, but understanding the technology and figure out where you fit in and you can get in with a company that's growing or start your own. Yeah. I think that's where a lot of that wealth creation can be. The other part, like you said, is you have that $100 or $200 a month. You can figure out where you can earn some decent yield on it. Again, don't over speculate, because 99.5% of those over speculators end up losing all their money and they get angry and they go, this is all a scam, and they walk away from it instead of going, I've learned, I'm trying to learn something from this. One of the great things that Bitcoin has given us is so many people now are educating themselves and investigating what money really means and where value really comes from. And I think that's a really important point to understand, is we didn't care before. We just trusted that the government was going to produce the correct amount of dollars for us. And now everyone's going, wait a minute, they kind of overproduced there. We have this Bitcoin thing and people are starting to learn about that. So I think that's important. And again, like it sounds bad that I'm going, I don't know if there's really a way to produce a tremendous amount of wealth from a couple $100, except you just invest it, you compound it, you don't do anything stupid, you don't try to turn 200 into 2 million tomorrow.
You don't go 100x on.
You don't try to go 100x. You don't try to get into meme coins. Again, I not giving financial advice, but if there's any financial advice I can give you, it's you're pretty certain to not turn 200 into 2 million tomorrow. On anything that's legal. Right. Or anything that isn't like just absolute 100% luck. Right. It's basically a lottery ticket at that point.
Right.
So there's no good. I mean, it's not a get rich quick scheme. It is a methodical. I'm going to put my money in. I'm going to see what happens. If I want to try out a protocol and liquidity pool, the beauty is you can do it for $100. You can do it for super small amounts, because you don't have to put in $100,000 at a time. You can put in 100 and you can play with these protocols. And I have a nephew who's been doing this for a while, and now he's going to get a job with a crypto company out of college because he's got an accounting degree now, but he understands decentralized exchanges and liquidity pools, and not many people do. And it's because he put, a couple $100 in and played around with it and saw what happened when markets moved up and down, and saw where yield went, and saw how to provide liquidity. And that's what you can do with the money, is educate yourself, use it to educate yourself. You've never had a time when you can dabble in something like this without having huge expenses
for such a small amount.
Right. It used to be if you wanted to dabble in the stock market, it was expensive to do that. If you put $100 in the stock market, like 40 of it was taken out in fees. But now, like, you can dabble in this world, again, without speculating, and really get an understanding of how it all works. And you're really going to understand how financial systems work and how money flow works and everything. And that's like an education you couldn't get years ago. And you can do it literally like second to second, and you can get lost in it. That's why we call it the rabbit hole. You can go way down there, which I have done. And that to me is where I would invest the money, is the fact that you can do it easily, quickly. You can contribute money to various pools. I mean, there's an ungodly amount of research out there. You can follow, you can watch podcasts. You can really learn in a way that you never could before.
Totally. You can talk to Chat GPT or Grok and really just have it lay out for you how to get started with that.
Right. And if you don't understand how a particular pool works, you can feed it in those AI programs. And, you always got to kind of be careful what they're going to tell you, and don't ask them for financial advice. But just, kind of understand how these pools work, or how these protocols work, And from then on, you can try them out, and you can try them out for really small amounts.
Yeah.
That is not going to turn you into a multimillionaire with that small amount, but the education you're going to get and the understanding, that's what's going to help you grow your wealth.
Mm-hmm. Absolutely. I mean, you know, and that's the whole idea of that's why you dollar cost average. You know, most people aren't coming into something with huge chunks of money. There are people that are, but when you're first getting started in investing, you just need to have conviction in what you're investing in. Right. And, you know, I think it's
do your research, have your conviction. Don't let anyone else sway you. If you have a certain way you want to do things, do them your way.
Yep.
Right. And when you start to let other people tell you, here's how I made my money, you should do this. Chances are, if they've already made their money, the opportunity's gone.
Yeah. Circumstances are different. Like we were discussing earlier, the circumstances are never the same. So the way one person made $1 million is not the way another person is going to make $1 million. And there are certain principles that overlay all of those things that we can learn from and we can utilize, but opportunity is always changing. And I think I want to say the Charlie Munger quote real quick, because we were talking about leverage. You know, Charlie Munger said that there's only 3 ways a good man can go broke.
Right.
Ladies, liquor, and leverage.
Yep, exactly.
And so when you're getting into stuff like this, it's like you said, I made a joke about 100X is if you want to trade a little leverage, you just have to understand what you're doing. Right. And you understand that it's incredibly risky.
Right.
But if you're trying to build wealth long-term, it's through these strategies of buying and holding something that you believe in, that you're convicted in, that you see the future for. And I think that to me is what has made me so passionate about blockchain in general is I see this future where through blockchain, I can be my own bank and I can generate passive yield. And it's not even a future anymore. Like, as I say that, I'm saying I saw this future in 2019, that they would come to this point. And now here we are, where we're at the point where I can do it.
Right. And what you're doing is you're investing in yourself, right?
Yeah.
Then that's where I say, learn this, you know, educate yourself. And that's where you can invest in yourself, whether it's your own wealth, your own business, you know, creating, you know, as an entrepreneur. That's kind of the beauty of this is now going through the iterations. You can start your own business without a whole lot of overhead.
Yeah.
Right. And if that business is coding, if that business has to do with building blockchain technology, or just using the technology to build something like, you know, to build something using lending based on some of their expertise. So if you're in the sports field, if you understand NIL or something, how can I help those people using this technology, not in a get rich quick kind of way, but in a, I'm going to keep your money safe or I'm going to make sure you get paid. I know people that are using that for musical artists that are on Spotify that get these little, you know, tiny little checks all the time, and they're helping them with the financing of it. And the people who created the code are doing very well, right? Why? Because they're helping the artist get their money faster. Yeah. And they're helping them get it into their wallet where it's already able to be spent or already able to be, or, you know, to be used for earning capacity, right? So it's understanding the technology, understanding kind of what your expertise and what you're passionate about, and investing in yourself. And the technology is giving you an opportunity you never had before. Or I say you never had before. You've had the opportunity. I never had this opportunity until recently, right? Yeah. Because I had to grow up in the age of checks and checkbooks and debit cards and credit cards and all, and, you know, banks with huge buildings and all that. And now it's all in my phone, right? And it's all on chain and decentralized. And in 10 years, that's just going to be normal. Right. Right. But if you understand it now, when it becomes normal, you're the one going, well, I built a business on this, and now my business is the normal one. Mine is the bank. Yeah. Now mine is the lending institution now, or mine is the private equity type institution now, because I understood the technology before anyone else did. Mm-hmm.
Well, and I think that goes back to just, you know, as athletes in particular, we always have coaches. You know, we've had coaches, and it gets to the point where not only do you have your basketball coach, but you have your offensive coach, you have your defensive coach, you have your person teaching you specifics on shooting your free throws. Like
you have your off-season trainer who helps you just with conditioning, right?
Exactly. And we have all these coaches. And so even non-athletes, you know, you have your professors, you have your teachers, you have your mentors, and no one teaches us. There's no part of the public education system that teaches you how money works.
No. Not
there's
very well.
yeah, absolutely no part. I think maybe in high school, we had one day where they taught us how to write a check or something. But they're not teaching you any of this. I don't want to go too far down the rabbit hole there, but they're not incentivized. There's no incentive for the hierarchy as it is to teach you how money works. But blockchain is this amazing equalizer. And because of the transparency of it. And so for those that are still young, this opportunity is not going to exist forever. Just like, you talked about the early days of the internet, the opportunity to build Facebook now is over. Right. It happened 20 plus years ago. And we are at that point in blockchain where the opportunity is now to be able to come in and learn these things and understand these protocols and principles. The opportunity exists today. 3, 4, 5 years from now, I believe there will still be plenty of opportunity to build and grow, but a lot of the opportunity that is today will already be gone. There'll be other opportunities, but right now it's wide open. Right. And to call it the Wild West is really an understatement.
Right. And the thing that I always like to caution people about is you see guys, I mean, we've talked about Facebook a few times, right? You see Zuckerberg, who's a multi-billionaire, right? Yeah. And everyone wants to build this unicorn company. Yeah. The thing is, you can build significant wealth without building a unicorn company. Yeah. You can build a company that makes you, $1 million or $2 million. I mean, $500,000 a year, you live a pretty good life.
Right.
Right. And you got to, you figure out your work-life balance and all that. So not everyone has to be a multi-billionaire. Not everyone has to be super early into Bitcoin, and not everyone has to build Facebook and Amazon and such. Yeah. You can be perfectly happy and do great without doing that and understanding the system and build a great business and a great life for yourself. Yeah. So you don't always have to shoot for, I have to be a unicorn or bust. I have to find the next greatest thing. Yeah. I have to build the next Facebook. No, you just have to build something that generates cash flow for you above and beyond what you spend. And then just keep doing that over and better and better and more efficient. And that's how you get to be successful, and you find the inefficiencies and you hammer those out and you get better and better and better. Yeah. But it doesn't have to be that I'm going to sit in my dorm room today and figure out the next Facebook and I'm not going to come out until I do. Because you can find inefficiencies, use the technology to right those inefficiencies and build a business that way. And again, you can be wildly successful in a way that maybe you're not going to be in a magazine. Maybe you're not going to be, Zuckerberg, but there are a whole lot of successful people that aren't Zuckerberg.
And that's not the secret to happiness. And I say that's not the secret to financial freedom either. Right. Like, you don't have to make millions of dollars to be financially free. No. You have to figure out what your actual life goals are, how you want to live. Of course, we would all love to fly on private jets. I just need the leg room for it, Yeah. But you don't have to have that type of lavish lifestyle. You can live very comfortably, very happy, having good principles of community and the right people around you and things you're passionate about. You have to start with
spending less money than you make.
Yep.
Like just spend less money
than you make. Great principle.
And then redo that over and over again. Yeah. Right.
Yeah.
Like you got to start small sometimes, and you make, one good habit into the next one, into the next one. And next thing you know, you're successful. When you look back, you go, that looks like it instantly happened. I became an overnight success. Overnight successes take years and years and years 100%. To actually build. Yeah. And then it clicks and then it turns. But again, it goes back to the education, to trying these things out, to understanding that I'm not going to turn $100 into 10 million tomorrow. I need to make more money than I spend. I need to be comfortable and happy with myself, invest in myself. And again, understanding this technology, you're 10 years ahead of everyone.
Yeah.
And if you understand the technology and you're 10 years ahead, then you know where to build, where it's going. And you can, going back to the sports analogy, you can skate to where the puck is.
Yeah. Yeah. Well, this has been a wildly fun conversation, Adam. I appreciate it. I feel like I could sit here and pick your brain for another hour. Yeah. But this is just really fun. And
I'll come back and we'll do it again.
Cool. I really appreciate, you coming here and talking to me. For all the people that are interested in protocol wealth and want to understand how, maybe you have a significant amount of wealth in cryptocurrency, or maybe you're just getting started. You want to put some money in there that can generate you money. What is the best way for people to get in touch with you and Protocol Wealth to be able to take some next steps?
I would say for the most part, protocolwealth.io is our website that pretty much has everything. From there, you can find social media and everything else, all the other ways to find us. I'm not as active on social media anymore, partially because I can't give financial advice or anything like that, and partially because I just don't have time.
Yeah.
So protocolwealth.io is the place to go. That's where we have everything.
That's awesome. Well, Adam, I really appreciate it, man. We'll talk more soon. Thank you.
Appreciate it.
I'm Will Carr, and I'm here to fire you up.